Why did Meta's stock surge recently? It's a question many are asking. Well, let's take a moment to explore this intriguing development. The tech giant Meta recently saw a phenomenal surge in its stock price to the tune of a 20% increase. This boost came on the heels of a triumphant fourth-quarter profit report that left many in the business world pleasantly surprised. But that's not all. For the first time in the company's history, Meta issued a dividend to its shareholders, a significant event that certainly added to the excitement around the company's financial performance. This dividend, a real milestone for Meta, is a clear sign of the company's robust growth and financial stability. Yet, as intriguing as this surge may be, it's essential to remember that it didn't just happen overnight. The rise in Meta's stock price is a result of a series of strategic decisions and successful ventures. So let's delve into the events leading up to it. The fourth quarter of 2023 was a remarkable period for Meta. That's right. This tech titan didn't just have a good quarter, it had an exceptional one. Let's dive into the numbers. Meta's revenue for this period rose by a whopping 25%, reaching a staggering $40.1 billion. That's right, $40.1 billion, not million. This is a figure that not only demonstrates Meta's dominance in the tech sector, but also its consistent growth and adaptability in an ever-evolving market. But the good news doesn't stop there. The company's net income didn't just double, it tripled. Yes, you heard that right. It tripled to an astounding $14 billion. This is a testament to Meta's ability to effectively manage its resources, optimize its operations, and deliver value to its shareholders. Now let's take a peek into the future. Meta is already forecasting its first quarter sales to be in the range of $34.5 to $37 billion. This projection further illustrates the company's confidence in its business model and its ability to sustain growth in the coming months. These figures are a clear reflection of Meta's robust business strategy and its commitment to innovation. They depict a company that's not just surviving in a competitive landscape, but thriving. Meta's fourth quarter of 2023 was indeed a period of extraordinary financial success. But it wasn't just the financials that boosted Meta's stock. There were other factors at play. And we'll delve into those as we move along. So stay tuned, because the story of Meta's success is far from over. For the first time in its history, Meta issued a dividend. This moment was indeed a landmark in the company's journey. This dividend wasn't a mere token, it came in at a hefty 50 cents a share, a move that signaled confidence to the market. You see, dividends are significant. They're essentially a portion of a company's earnings given back to its shareholders. It's a way for companies to share their success with those who invested in them. And when a company like Meta announces a dividend for the first time, it sends a strong message that they have both the earnings and the inclination to reward their investors. This, in turn, boosts investor confidence and can lead to a surge in the stock's price, which is precisely what we saw with Meta. But the company didn't stop at a dividend. Meta also announced a $50 billion share buyback. Now, this is another strategic move that companies use to show confidence in their own stock. By buying back its shares, Meta effectively reduces the number of shares available on the market. This scarcity can drive up the price of the remaining shares, again leading to a boost in the stock's price. So, in essence, Meta's dividend and buyback were both signs of strong financial health and a positive outlook for the future. They were clear signals to investors that Meta believes in its own value and is willing to put its money where its mouth is. And the market responded in kind, with a surge in Meta's stock. Yet the dividend and buyback were just part of the equation. Meta has been making significant strides in artificial intelligence. One of their most notable projects is the Llama large language model. This AI innovation is more than just a technological achievement. It represents a strategic leap forward, harnessing the power of artificial intelligence to revolutionize the way we interact with the digital world. In addition to their AI advancements, Meta has declared 2023 as a year of efficiency. This strategic focus has led to some impressive financial results. By streamlining operations and cutting costs, Meta has managed to double its operating margin to a whopping 41%. This is a testament to the company's commitment to creating value, not just through innovation, but also through operational excellence. These advancements in AI and the focus on efficiency are not isolated strategies. They are part of a cohesive plan, working in tandem to drive Meta's growth. It's this combination of forward-thinking technology and shrewd business strategy that's pushed Meta's valuation past the trillion-dollar mark. All these factors combined led to Meta's stock surge. So why did Meta's stock surge? Let's look at the highlights. Firstly, Meta's fourth quarter financials were impressive, with a tripling in profit and a 25% increase in revenue. This strong performance was a key driver in the stock's rise. Next, we have the first ever dividend. Meta announced a quarterly dividend of 50 cents a share, a move that certainly excited investors. The company also announced a $50 billion share buyback, another significant factor in the stock's surge. By reducing the number of shares available, this buyback effectively increased the value of each remaining share. Then there's the focus on artificial intelligence, particularly the Llama large language model. This has garnered considerable attention and added to the company's appeal. And finally, the company's aim for this to be a year of efficiency. Meta has been cutting costs, which resulted in a doubling of its operating margin to 41%. It's clear that Meta's strategic moves have paid off, resulting in a significant surge in its stock.